morning. It's a bright, fresh new Monday morning and you're watching Market Cafe on ET now. Winnie, very good morning, and well, this is a show where we're going to take you through everything that's been happening in India as well as globally. We have lots to cover. It's been an eventful weekend for us at least, and in the second half of the show, we'll also go stock specific, tell you about all the stocks that will be in focus either on the back of their Q1 earnings, individual updates, or even the ones that brokerages are flagging off for us bright and early this fresh new week. So on that note, let's kickstart the show then, and Winnie, take us through what the global markets look like. US has been quite, topsy-turvy over the course of the week, but not all that bad.
By the end of the week, at least on Friday, it was on a positive
note. Not all
note.
that bad, exactly.
Yeah, Friday it closed on the positive note. Though for the week, yes, we've seen Dow Jones that finished a bit lower by around 0.6%. Also, S&P 500 also closed lower, as well as Nasdaq. So yes, for the week, all the three benchmark indices in the US surely did close lower. But all in all, for Friday, it did close on the positive note, keeping an eye out on that. Now, this week is going to be quite interesting when you watch out for, in terms of the US markets, you're watching out for the IIP CPI data in the US. So that is something, all investors and in the market, US markets are keeping an eye out on, that inflation data point, consumer price index. That is where everyone is going to be watching out for. It's on Tuesday and Wednesday, US time. So yes, Wednesday, Thursday for us is what we'll be keeping an eye out on. A lot of heavyweight earnings also will be coming out of the US. Important to see and how these will be actually performing. We have Walmart, we have Home Depot. So yes, the retail side, maybe that's something that we are keeping an eye out on in terms of numbers. Cisco also will be reporting its numbers. Now, other than that, let's keep an eye out on some commentary also that came in. Fed's Bowman also spoke about rate cuts that will be needed if inflation keeps, falling. Then yes, rate cuts is something that they would be looking at. As of now, US stock futures, steady inflation data, everyone's keeping an eye out on that. So yes, that's the handover from the US markets, but European markets and how they closed. FTSE DAX, slight bit of a positive bias, you could say, 0.2% of an uptick that we are seeing for FTSE as well as DAX, and CAC is something that has remained unchanged. So yes, European markets, overall global markets were much more volatile. So yes, keeping an eye out on that one. Interesting move that are coming in right now, but slight bit of a positive handover though. Because so much has happened in the Indian markets and so many news flows that came in, today we're keeping an eye out on how it opens. As of now, Nifty implied not bad, right? A flattish start is what one could watch out for. 0.1% of decline, so nothing that Nifty normally doesn't manage to recover if we have to talk about a move coming in. But yes, nothing bad for the Nifty implied open, just 0.1% of downtick as of now that we're seeing.
Absolutely. With that, let's also take a look at what commodities have done overnight, and lots to talk about on that front as well. European markets have ended green. Also on the commodities front, now WTI and Brent as of now rather flat, but in the green nonetheless. WTI at $77 per barrel, so comfortably above that 75 mark. Brent is also at 79.7, so just kissing distance away from that $80 per barrel mark is where Brent is at as well. And lots to talk about also when it actually comes to oil, because US crude oil, right, which is the WTI crude oil index, has gained more than 4% this week as recession fears have eased and the risk of a wider war in the Middle East that could disrupt production and transformation, that continues to, however, loom over the market. So we will be keeping a watchful eye on what oil, gold and other assets also do over the next few days. Oil advanced as the S&P 500 traded higher on Friday and erasing most of its losses from a steep sell-off that both of these indices have seen earlier in the week. Now, the Middle East remains on edge after the assassination of Hamas leader Ismail Haniyeh in Tehran last week, remember? And Israel has been preparing for retaliatory strikes by Iran and the Hezbollah militia in Lebanon, though the US has been working through diplomatic channels to avert an escalation of hostilities. Now also comes into play a whole host of other countries. The US, Egypt as well as Qatar have demanded in a joint statement that Hamas and Israel return to the negotiating table to close a ceasefire deal in Gaza. So this is everything that has been happening on the geopolitical front, and that has been affecting oil and crude. But with that, let's also take a look at what gold is up to. Gold, however, 0.2% under pressure, 2,468. So roughly around 2,470, slightly under that $2,500 per barrel pardon me, dollar per ounce mark that it had reached. Let's also take a look at what cryptocurrencies are up to, and a slight bit of a fall being seen across cryptocurrencies as well. You have some consolidation being seen over here because Bitcoin 4.5% lower as of now, under that $60,000 mark. You have 58,444 is where Bitcoin is as of now. Ether also 2.3% lower, just above 2,500 is where Ether is as of now. Bitcoin Cash almost 6% lower. You have Litecoin almost 1.5% lower, but well, yes, Bitcoin is 4.5% lower as we speak. So well, yes, this is everything that's been happening in terms of equities as well as commodities.
Absolutely, but a lot of important events that we're keeping an eye out on today. Let's talk about firstly in terms of India data points, CPI and IIP data, that's industrial production data that we're watching out for as well. Earnings, yes, a lot of non-Nifty companies will be reporting their numbers. Natco Pharma, Hindustan Bajaj, Redkane, Hudco, as well as Cera Sanitary Ware and Alembic, some of the other names also, a lot of names that are there last few days for earnings season, so keeping an eye on that. Borosil Renewables, the board will be meeting today to consider some fundraising plans, so keep an eye on that. We have IPO watch, that is, we have Saraswati Sari Depot that opens up for subscription today. Watching out for that. OPEC monthly report, keep an eye on that, as well as in terms of lock-in period ending for Aadhaar Housing, as well as TBO Tech. So important to watch out for all the stocks as well. And Trump is going to be sitting down for an interview with Elon Musk. That's going to be a lot of fun. I think that's going to be one entertaining interview that everyone is going to be watching out for. But yes, that's something that will come out tomorrow and talk about the comments that actually come in on that front. But an interesting one to watch out for.
Absolutely, lots to watch out for today, but let's get going with everything that we have to cover this morning. Let's start with comments coming in from the FOMC. Fed Reserve Governor Michelle Bowman softens hawkish stance while acknowledging progress on inflation over the last couple of months. A rather grounded statement coming in from the Fed official as she continued to press for patience over tackling inflation without undermining the current progress. Bowman's remarks did not foreclose a rate cut next month. Indeed, she noted that the Fed by its September meeting will have additional economic data as well as a better idea of how recent financial market volatility may affect the economic outlook. However, she remains a voice of caution on the Fed policy setting committee as it moves closer to cutting interest rates.
And meanwhile, the Bank of America's chief, Brian Moynihan, is sounding rather assertive, said that the US consumer could soon be discouraged without rate cuts from the US central bank. He said that, I quote, once American consumer really starts going very negative, then it's hard to get them back. Additionally, he also adds and heard backing independent central bank free of political clout, believes people are free to advise the Fed chair on the way forward, but it remains solely Powell's job to decide the rest.
Well, let's shift focus to the movies then, talk a little about entertainment. Deadpool and Wolverine continue to smash records, surpassing that $1 billion mark at the global box office. The Ryan Reynolds and the Hugh Jackman starrer has now joined Inside Out 2 as the only two films to have achieved that coveted feat in 2024. Notably, it will soon take over 2019's Joker as the highest grossing R-rated film in history.
And moving on, Paris closes out on 2.5 weeks of Olympic Games with a star-studded closing ceremony at France's National Stadium, said the France handing over the duties for the Summer Games to Los Angeles in 2028. In a speech, International Olympic Committee President Thomas Bach, who sat with the French President Emmanuel Macron during the show, said that the Games can create a cultural peace that inspires the world. Nothing that athletes respected each other, even if your countries are divided by conflict. More razzmatazz as Hollywood star Tom Cruise descended from the top of the stadium to the Mission Impossible theme song, shaking hands with athletes. Additionally, Red Hot Chili Peppers, Billie Eilish, Snoop Dogg and Dr. Dre then performed on Venice Beach as a part of the star-studded music set to conclude the ceremony.
Well, the Paris Olympics have come to an end and it was quite the spectacle, Vinny, if you asked me last evening. What a closing ceremony. But on that note, we'll also slip into a very short break on this edition of Market Cafe. We'll take a look at how the Asian markets have opened when we return. See you stay here. Hi there, welcome back. Thanks so much for still staying tuned to Market Cafe. You're watching ET Now. Let's take a look at how the Asian markets have opened up this morning, and looking pretty optimistic as of now is where the Asian markets consensus looks like as of now. Let's start by looking at South Korea's Kospi. That seems to be outperforming its Asian peers. It opened with gains of 1.2%, as of now also 1% higher, so doing pretty well for itself is South Korea's Kospi. Shifting focus, let's talk about Australia's ASX 200. That also opened 0.7% higher, continues to be there, not doing much, slightly more than 0.5% gain coming in for ASX 200 as of now as well. Let's also quickly pull up Hang Seng and Shanghai. Take a look at what they're doing. Hang Seng coming slightly under pressure, almost 0.4% lower, a 60-point cut coming in on Hang Seng as of now. And let's also take a look at what Shanghai is up to. Shanghai also in the red, 0.3% lower, a nominal 8-point cut coming in for Shanghai this morning as well. Let's pull up Nikkei, take a look at what Nikkei did on Friday, because Japanese markets are closed today for a public holiday on account of Mountain Day in Japan today. So you have Nikkei that closed with an uptick of almost 0.6%, but these are Friday's rates. Let's also talk about where we shut shop for the week on Friday. We closed at 24,367, implied open absolutely at 24,367, not showing much, at least on a spot basis. On the futures basis, slightly like a 34-point downtick coming in, but on the spot basis, exactly where we closed on Friday, Vinny.
Okay, surely keeping an eye on the Asian markets, but
Hi there, welcome back. Now, 18 months after Hindenburg Research shook India with allegations that the Adani Group had manipulated stocks and misused tax havens, a new report has emerged. This time, the spotlight is on SEBI chief Madhvi Puri Buch and her husband Dhaval Buch. According to the Hindenburg Report, the couple allegedly owned stakes in offshore entities based in Mauritius and Bermuda, which are linked to Gautam Adani's brother Vinod Adani. The Adani Group and the SEBI have both rejected the allegations, calling them a red herring by a desperate entity which has blatant disregard for Indian laws. The Adani Group goes on to further say that the latest allegations are malicious and that they are manipulative selections of publicly available information. SEBI chair and her husband have called the allegations baseless insinuations that are devoid of any truth. My colleague Ankur is joining us with all the latest developments on this story. Ankur.
Yes, market regulator SEBI has given point-by-point rebuttal to the serious allegations which has been levelled by Hindenburg Report against SEBI chairperson Madhvi Puri Buch as well as her husband Dhaval Buch. Now, first and foremost, SEBI has tried to address the investors, and it says that investors should exercise caution as well as remain calm while reading such kind of reports. They should also pay attention to the disclaimer which has been given for readers, stating that Hindenburg may have short positions in the securities which are mentioned in the report. Now, as far as the three broad allegations, which includes why Adani investigations was not done properly by SEBI, why there was show cause notice which was sent to Hindenburg, as well as the REIT regulations amendment which may have benefited to some large group. Now, first and foremost, SEBI is stating that Supreme Court has stated on 3rd of January this year that 22 out of 24 investigations have been completed against Adani. Another investigation was completed by month of March, and the only pending investigation which is continuing is near completion. And with the process which is continuing, it is part of the process that SEBI acts in the enforcement matter, and it has sent the show cause notice to Hindenburg as per the procedure. It also gives opportunity for the accused to be heard, and that opportunity has been provided to Hindenburg. Apart from that, as far as the REIT regulations are concerned, it is part of the consultation process. It also goes through committees, and after the feedback which is received by the stakeholders. Only the SEBI board approves everything. It is not that one particular person is approving it. So all in all, SEBI has said that it has a robust mechanism which is in line with the global best practices. And not only SEBI, but Dhaval Buch as well as Madhvi Puri Buch in individual capacity has also stated that their financials are an open book.
Okay, but let's move on and also listen in to what the opposition parties had to say on the same.
The savings of millions of Indians, hard-earned, honestly earned savings, are at risk. It is therefore imperative that this matter is investigated. Retail investors, honest investors, pensioners have three questions. The first, why has Chairperson Madhavi Buch not resigned? Second, God forbid something were to go wrong and investors were to lose their money. Who is responsible? Is the Prime Minister of India responsible? Is Madhavi Buch responsible? Or is Mr. Adani responsible? And finally, the Supreme Court has been looking at this matter. New allegations have emerged. Very serious, explosive allegations have emerged. Is the Supreme Court going to look at this matter suo moto again? Slowly becoming crystal clear why Prime Minister Modi is against a joint parliamentary committee looking into this matter.
All right, that's the word coming in from Rahul Gandhi on this entire debacle. But Finance Minister Nirmala Sitharaman asserted that the amendments in the banking law have been long overdue, while adding that the interest rates on deposits and lending are deregulated and banks are free to decide rates as per their business. She also said that the banks were advised to focus on core businesses to increase deposits, and there's need to provide benefits to customers to encourage deposits as well. My colleague Prakash Priyadarshi is here with more details on this. Prakash.
Yes, while interacting with the media after her address to the Central Board of RBI, the Finance Minister has covered a wide range of topics. When asked about the Banking Laws Amendment Bill 2024, which was introduced in Lok Sabha yesterday, the Finance Minister has said that the government has proposed several such amendments to the Act in order to protect the interest of depositors and the investors. And one of them was allowing higher number of nominees in the bank accounts in order to address the issue related to rising unclaimed deposits in the banking system. Along with that, reporting norms for banks to the RBI are also being revised. When asked about slow growth in bank deposits, the Finance Minister went on saying that the banks have been advised to focus on core business, come out with the different sort of strategies to attract deposits in the banking system. Along with that, the banks need to understand the fact that the customers have various options available in hand at this point of time, and that can be seen through rising in retail investments in the stock market. Therefore, bank should come out with the different sort of strategies to address this challenge. Along with that, when asked about government or RBI intervention in deposit rates, the RBI governor available on the occasion has replied by saying that the bank deposit rates and the lending rates have already been deregulated. Therefore, any such instructions to the banks would be distortive. The Finance Minister, along with that, has also clearly mentioned that there is no such proposal before her to increase foreign investment in the public sector banks, and any such reports are speculative and incorrect. Last but not the least, when asked about the government stance on the Bangladesh crisis, the Finance Minister has mentioned that our investment in Bangladesh are safe. In fact, some uncertainties are there for garment sector. Industry has raised its concern, but it's too early to make full assessment. But the government is hoping the situation will return to normal very soon.
Okay, let's move on and talk about Amara Raja, because Amara Raja and Piaggio India have entered into an agreement where Amara Raja will manufacture lithium-ion phosphate, lithium-ion cells and chargers at its Giga factory in Telangana. Let's go across to Shrishti for more details on that. Shrishti?
Well, indeed, a big day for Amara Raja Group today as the company came out with two big announcements. First up, as the company publishes the chapter 1 of its much-awaited Giga Corridor. As you can see on the back, ET Now's team is right here in Divipalli, where the company has inaugurated 1.5 gigawatt hours of capacity for the battery packs. And adjacent to that is just the site where the company will come out with its battery cell manufacturing plant as well. As we know, this particular facility is expandable to 5 gigawatt hours of capacity, and going ahead in the battery cell manufacturing, they have aimed to have 16 gigawatt hours of capacity, and the total capex announcement is of 9,500 crores. Along with that, the second big announcement is the MOU signed with Piaggio India. Piaggio India in the three-wheeler market has a market share of around 8%, and Amara Raja Group will be developing and supplying the battery packs and battery cells to Piaggio India in the times ahead. And not just that, they'll also be supplying the cells for their upcoming two-wheeler. Just a while back, Amara Raja Group did signed an MOU with two-wheeler manufacturer Ather Energy, and we will tell you that the supply has already started, even the production as well as both the two-wheeler as well as the three-wheeler line is already operational at this particular site. So these are the two big announcements made by Amara Raja Group today.
All right, Shrishti, thanks so much for taking us through that. But she also got into conversation with Amara Raja's group MD Jaydev Gala on the company's way forward. He shared what all can be expected from the EV sector. Let's go across and listen into a slice of that conversation.
One story is, of course, the China story, where they're ahead of the rest of the world in almost every respect. They have 80% of the lithium-ion battery manufacturing capacity. They're making 80% of the electric vehicles in the world. They have control over nearly 80% of the raw materials, whether they're in China or from anywhere else. 80% of the materials are being refined in China. So they're far ahead of everyone else. India is going to be following more the Chinese model and not the Western model. And so you can already see it happening. Two-wheelers are already penetrating very fast. And even if you look at the EVs that are doing well in terms of volumes, it's the Tata Nexon and such vehicles at the smaller end of the market that are really starting to penetrate. So I would say that I'm very bullish and very confident about EV market in India. As much as I may have skepticism about how much it may penetrate in the West, I think we're going to be following the Chinese model, and I have no doubt that the Indian story is going to be more similar to China than it is to the West.
But Mr. Gala, I also wanted to understand that one such trend that we are seeing in the market is the decline in the lithium battery prices. As a company who is looking forward to go big in this particular space, how do you assess the trends that is shaping up right now? Where do you see the prices heading in?
Whereas if prices are coming down because there's an overcapacity in the Chinese market and they're dumping batteries around the world, that's not something that should be encouraged by anyone because it's not sustainable. And we'll end up killing the local industry because of predatory pricing from China. So that needs to be watched out for.
But in the long run or in the medium term, do you see the prices coming down further? And if at all, because since once you have the Giga factory set up and maybe in the medium term when you start supplying those in a big way, then what's the sustainability or the financial metrics that we look at, like the sustainable margins or the profitability? Do you believe that that will be impacted or a lot of fluctuation is expected?
No, I think, as I said, if it's technology driven, that means change in design, change in materials, change in manufacturing process that's bringing costs down. That's something that we'll also have to adopt and get on board with. Scale efficiencies are another way to bring costs down.
So does that mean that there's a target that you have set for the Giga quarter to get on board and then maybe get back?
By around April to June of 25, we'll have our first 2 gigawatt hours of cell making pilot capacity ready and running. And by the end of FY27, we'll have 16 gigawatt hours up and running.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stock-specific update after the break.
Hi there, welcome back. Still watching Market Cafe on ET now. Let me take it across to my colleague Ria now, who's joining us with a list of all the buzzers to watch out for in today's trade, either on the back of their Q1 earnings or individual news flows. Good morning, Ria. Take it away.
Yes, good morning. Let's take a look at the stocks in focus today. We had a lot of companies reporting their Q1 FY25 earnings over the weekend. First up, we have Inox Wind, which has reported a very strong set of numbers. The revenue went up around 84% on a year-on-year basis, and they've reported a net profit of around 47 crores in this quarter versus a loss of 65 crores in Q1 of last year. The EBITDA also went up around 95% on a year-on-year basis, and the margin also saw an expansion of around 123 basis points on a year-on-year basis. EMS has also reported a good set of numbers. They've seen strong growth on all fronts in the revenue, EBITDA and net profit, and the EBITDA margin also saw an expansion of around 90 basis points on a year-on-year basis. Let's also talk about Jyoti CNC Auto, which has again reported a good set of earnings. The revenue went up around 74% on a year-on-year basis, and they've also reported a net profit of around 51 crores in this quarter versus a loss of around 13.5 crores in the previous quarter. The EBITDA margin also came in at around 26% in this quarter versus 7.8% in Q1 of last year, and the EBITDA saw an expansion of 477% on a year-on-year basis. Lastly, we have Finolex Cables, which has reported quite a weak set of numbers. While the revenue did see a marginal uptick of around 2.2% on a year-on-year basis, and the net profit also went up around 19% over the previous year. The EBITDA margin saw a steep contraction of 186 basis points on a year-on-year basis, and the EBITDA has also gone down around 13.4% on a year-on-year basis.
Okay, surely keeping an eye out on that. Let's move on and look at what the brokerages are highlighting this morning. Which are the important stocks on their radar? Ansh is joining in with us.
Yes, let's start with Grasim first because Citi has maintained buy rating on the stock and they have hiked the target price from 3,000 directly to 3,250, which shows there is strong bullish sentiment in the stock. Now, they believe that the Paints brand of the company would likely end FY25 with high single-digit market share. Apart from this, Aurobindo Pharma will also be in focus as Investec has come up with a report of on the stock and maintained the buy rating with target price of 1,400. They said that the numbers were in line with the expectation, which is a bit of a positive sign. Also, they believe that the strong momentum will continue and they estimate EBITDA margin to remain healthy at around 21.4%, but it has dipped on quarter-on-quarter basis due to the new plant of Penji plant. Also, Goldman Sachs has come with a report on Info Edge and they have maintained sell signal and they have hiked the target price from 5,470 to 5,700 because they have said that the Q1 numbers were in line with the expectation, and they said that the increase in investment is positive for the long-term growth. That's why they have hiked the target price to 5,700 rupees. Apart from this, Jubilant Food will also be in focus as Citi has maintained buy rating and hiked the target price from 663 to 715 rupees. They believe that the outperformance journey has just started, which is positive for the stock. So keep an eye on the stocks.
All right, Ansh, thanks so much for taking us through all the stocks that will be in focus on the back of brokerage notes. But I also want to highlight two more stocks this morning, and that is Siemens as well as ABB. Now, Siemens has reported a weak set of numbers for its Q3 FY24, and uptick in employee costs has led to sharp margin decline on a sequential basis as well. Siemens has continued to lag ABB India on both the revenue and margin front for about 3 years. But what's going to lead to Siemens' revival? How does it stack up compared to ABB? Ria is joining us once again with all of those details. Ria.
Yes, well, so Siemens has reported quite a weak set of earnings in this quarter. Now, while the revenue did go up by around 7% on a year-on-year basis, on a sequential basis, it has gone down by around 10%. And the weakness, we have seen a weakness in the execution front also, largely in the gas and power and the digital industry segments. Although in the smart infrastructure segment, they saw a healthy growth of around 15% on a year-on-year basis. Now, if you take a look at the margins, the EBITDA margins did go up over the previous year, but they saw a sharp decline on a QOQ basis, which was largely led by an increase in the employee cost. While this was a negative surprise, since the company had suggested that the decline in the employee cost and the margin uptick would sustain from the previous quarter. The order inflows, though, were quite strong, going up around 18% on a year-on-year basis, and this was largely driven by the smart infrastructure, mobility and the energy segments, but they did see a sustained weakness in the digital industry segment. Now, this increase in order inflow may help revive the weak order backlog, which can add some comfort going forward. Now, as you said, Siemens has continued to lag versus ABB India on both the revenue and the margin front, and this trend has been sustaining quarter after quarter for the past 3 years. Now, this lag largely seems to arise from the lack of localization in operations in Siemens and the weaker customer connect. If you remember, ABB India had delivered quite a strong set of earnings in the last week with a strong management commentary, and we saw a positive reaction in the stock going up around 8% post the earnings. Now, on the back of these negative earnings from Siemens, Kotak Securities has maintained a sell rating on the stock, and they've cut their estimates by 8 to 10%, and the target price has also been cut to rupees 4,600 from their earlier target of rupees 4,900.
That's the word coming in from Kotak Securities on Siemens as well. We had other brokerage notes like Motilal Oswal saying there's a miss as coming in from Siemens. They've cut the target price to 7,800 from 8,600. Even Access Cap has cut its top line estimate for the next year, as well as trimmed the EPS estimate. Target price is 7,335. Nuvama also said it missed their estimates, revised the target price also, but they revised it upwards. So keep an eye out on Siemens on the back of a lot of brokerage notes other than Kotak Securities also coming in this morning. So yes, surely a one to watch out for in a trade. So yes, important stock that we're keeping an eye out on. Siemens, sharp miss that is coming in even versus ABB. When you look at it, Snehi, it's not been anything exciting. So it will be surely important to see today how both the stocks react in trade as well, and how that's going to be moving forward as well in terms of the earnings and what we are watching out for from the cap good space specifically, because the big miss that we're seeing for Siemens versus its peer ABB.
Absolutely big miss coming in for Siemens this time around, so all eyes are going to be on that stock today as well. But on that note, we're going to bid you goodbye on this edition of Market Cafe. From Vinny, me and the entire team that put this show together, thanks so much for watching. But as we bid you goodbye, you stay tuned because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.